Welcome to our video on Old Age Security, or OAS for short. So in this video, we're going to cover 4 separate benefits provided by the OAS plan. We're actually going to begin with the second one, Guaranteed Income Supplement, followed by the allowance, and then the survivor allowance. To close it off, we're going to then go over the regular OAS benefits, which are the most prevalent by far and, of course, the most popular. The reason we do it this way, we want to make sure we have everyone's full attention as we go through the entire presentation, because regular OAS benefits are more than half the presentation. So, what is this whole OAS situation? Like, where do these benefits come from? Now, many of you may be aware of the Canada Pension Plan, or in Quebec, the QPP, which is their version of CPP, where the employee goes to work and they pay into it. But you don't pay into OAS. That's both good and bad. Basically, if you get old, the government will give you money. So as long as you've lived here long enough. This money comes out of the general tax revenues of the federal government, and OAS is available in all provinces and territories to those who are old enough to qualify. So, interestingly, the benefits are indexed to inflation 4 times a year, and we're going to discuss some of those benefits as we move through the presentation. Because your benefits can be reduced if you earn too high of an income, the OAS benefits period runs from July the 1st and ends on June the 30th. If you earn too high of an income, then you may lose some of your benefits. If you earn way too much money, then you're not going to get any benefits. So in a way, it's a really good plan where those who qualify, who are earning an appropriate amount of money, they receive the benefits. For those who are the super high income earners, they just don't get any of this money. They really don't need it. So the government has figured out how to take the very wealthy people and say, you're not going to be getting this money. Now, the reason that the current old age security period begins July the 1st and ends on June the 30th is because of when we file our tax return. Again, because this is based on your income, we have to use the income that we have for the most recent period. We report according to the calendar here in Canada. You have until approximately April the 30th. Those who are self-employed, you have a bit later to report, but most people have April the 30th. That's the deadline to report. And then the CRA has 6 weeks or so to go and process that return. And so that brings us to just shy of July the 1st, where the fine folks at Old Age Security can determine what was your income, was it too high, was it too low, which benefits do you get for the period starting July the 1st. So, for the period that begins July the 1st of 2024, it's going to end June 30th, 2025. We have to look back on the income from the previous year, from 2023. Because we don't have the income for 2024 as of yet. Not to mention that you have to process the return and the CRA has to go and look through it, right? So, if we want to consider the period for 2025-2026, well, we look back at the income of 2024. Anytime we have one of these instances where we're trying to figure it out, if you're sitting on the exam going, hold on, what is it again? Remember, you need 3 different years for every one instance. So we invert it. In 2024, well, I know what my income is. That'll impact my benefits for which years? Well, 2024, 2025, 2026. There's always 3 years. And this is for all the benefits, by the way, not just for regular OAS. These are for all the benefits. We'll actually circle back to the regular OAS in a moment. We're going to discuss GIS first. So the Guaranteed Income Supplement is there to assist low-income earners who are at least 65 years old or more. Now, I know you're sitting there thinking, well, you're kind of retired at that age. Well, yes, but it doesn't necessarily mean that you have enough saved and that you may need additional assistance from the government. So the guaranteed income supplement is non-taxable. Depending on one's marital status and the benefits that their spouse receives, there are different income cutoffs to receive this benefit. Inside of our written curriculum, those amounts are there, or you can consult the Government of Canada website. For the exam, you do not need to memorize all of these income cutoffs because they change every single year anyways. Now, somebody can qualify for the GIS and earn up to $5,000, no problem. There's not going to be any clawback of their benefits or reduction of them. If you earn more than $5,000 in the relevant period, then you will lose GIS benefits in the amount of 50 cents for every $1 that you earn in excess of the $5,000. So, GIS is not taxable. The benefit period is always the final 6 months of the year and the first 6 months of the next year. You must be at least age 65 or more to qualify, and dependent on other benefits received, you may receive a benefit that is as high as $646 or $1,073. Again, it depends on a number of different factors. So, if today is July the 5th, and we know this person, Josephine, earned $10,000 during the previous calendar year, we want to know how much her GIS benefit will be reduced. So, we take her income of $10,000, we subtract the $5,000 buffer that she can earn without losing benefits, we have $5,000 left. If she loses 50 cents on the dollar, she loses half of that, $2,500, which is about $208 a month. Next up, we have this other guy named Randall. He earned nothing during the previous calendar year. His spouse, however, earned a total of $10,000. So by how much will his GIS benefit be reduced? Well, that's an easy one. The answer is 0, because the reduction is dependent on his income, not the income of the spouse. So that's the whole point of asking this question, is to make sure that you identify that. Next up, we have the allowance, which is also a non-taxable benefit for low-income earners, only the difference is it's for those who are age 60 to 64. To qualify, the combined income of both spouses has to be under $40,272. That's for the period beginning July of 2024, meaning that's the income of 2023. The person who's aged between 60 and 64 who's applying for the allowance, their spouse or common law partner must receive the GIS benefit, which means the partner must be at least age 65, meaning they're past retirement age. If the spouse does not receive the GIS, then the person applying for the allowance will not receive the allowance. Obviously, if the spouse has passed away, then, well, what do? Well, then you have the survivor allowance, which is also non-taxable. It is a separate benefit available for low-income earners that are 60 to 64 years old. The person's spouse or common law partner must have passed away, and the person making the application should not have remarried or become the common law partner of another person. If this happens, they will not receive the survivor allowance. They don't qualify. The person making the application has to meet a certain income threshold, which means earning less than $29,328, and that's for the period beginning July of 2024. So, we've covered 3 of the 4 benefits. Of these 3, none of them are taxable. They all run July 1st to June 30th. The GIS, you must be 65 years old or more to receive, versus the allowance and or the survivor allowance. Actually, it's or the survivor allowance. You can't get both. You must be between 60 and 64 years old. Alrighty, we're on to slide number 10. of 18, almost halfway there, and we're going to start with the regular benefits in just a moment. But first, we need to help Jeremy. He earned no more than $10,000 in the past year, so at 63 years old, what benefit or benefits might he be entitled to? So between 60 and 65, it's either the allowance or the survivor allowance. It's one or the other. He can't get both. Or it's possible that he just isn't going to get either of them, again, depending on his income and his time in Canada. Next up, we have Geraldine. Again, she earns no more than $5,000 every single year, and she's 84 years old. So what benefit or benefits might she receive? Well, she's not going to get the allowance or the survivor allowance. She's too old for that. That leaves the GIS and regular OAS, which we'll cover in just a moment. She may or may not qualify for the GIS. She may or may not qualify for regular OAS benefits, depending how long she stayed in Canada. But these are the possible answers for the benefits that she may qualify for. Alrighty. So, when you undertake a financial plan for a client, more often than not, you're going to be including regular old age security inside of that plan, even if it gets clawed back because you have a very wealthy client. Rarely are you going to do a financial plan for somebody and talk about the GIS, because most of the time somebody who's on the guaranteed income supplement or receiving the allowance is a very low income earner. They don't have investable assets, and they probably don't have money to buy insurance or anything like that. They're basically just trying to get to the end of the month every month, because these are benefits really that are meant for the lower income earners in Canada. So you must be very well versed with regular OAS, because this is the one you will deal with the most often. In order to qualify for this benefit, which this one is taxable, out of the four, it's the only one that's taxable. To qualify, the person must have lived in Canada for at least 40 years between ages 18 and age 65 and earn less than a specified amount. Then they qualify for the full old age security. Now, it is possible to get partial OAS, we'll talk about that later, but to get full old age security, the person must be here 40 years, 40, between ages 18 and 65. Let's say somebody was here for 30 years. They immigrated to Canada at age 35. They were here for 30 years. They're entitled to the formula, the number of years in Canada, divide by 40. 40 is always the denominator. So 30 divided by 40, they're entitled to 75% of full OAS benefits. If they came here only 20 years before age 65 or 18 years before age 65, well, then it's 18 divided by 40 or 20 divided by 40, okay? So those who get partial benefits, there's two different things you need to know. First of all, if somebody is contacting you and they say, look, I reside outside of Canada, I'm 65 years old, I'm making the application, and I'd like to get some of these benefits because, I lived in Canada for a while, I worked there, I paid taxes, I think I'm entitled to something. Well, look, if you've moved outside of Canada, you need to have at least 20 years inside of Canada paying into this general tax revenues, basically to say, I've given you money, I've paid taxes, now I'm entitled to this money. And because you're outside of Canada, that money's probably going to be spent outside of Canada. So the government has said you must be at least 20 years in Canada for us to send this money outside of the country. Those who come to Canada a little bit later on in life, the momentum is running towards Canada, so they're probably living in Canada at the time of the application. Well, as long as they've lived here for 10 years, they live here now, that's where we've set the bar, is 10 years. The government pays out the benefits and that money flows back into Canada because the person lives here. So it's very simple. Outside of Canada, 20 years. Inside Canada, 10 years. Simple as that. Alrighty. For those who are the high income earners. So people who are living here in Canada, let's say they're born here, they've been here more than the 40 years that they require, and they're still working, or maybe they have, for some reason, income, employment income, even if they're self-employed, self-employment income. If they earn more than a specified amount of money, their benefits are clawed back by 15 cents for every dollar of income earned above that amount. For the benefits period beginning July the 1st of 2024, that amount is $86,912, and that's last year, 2023. If you multiply, that amount by the 15%, or the 142,609 minus 86,912 by the 15%, you'll figure out what kind of benefits are on the table. What can somebody get? So when somebody earns $142,609, they're not getting any benefits anymore. They've clawed it back to the maximum. If they're 75 and up, they have to earn $148,179 to have their benefits fully clawed back to zero. And that's because at age 75, the government gives a 10% increase to every single recipient of regular OAS. Basically, you're old, you're 65, we give you money. You're really old, you're 75, we give you more money. And the whole point is saying, look, we want you paid taxes. We're now going to, give you a small piece of that because we want to help your retirement goals or whatever it is. And so we're going to do an example in a few minutes about how to figure out how much money is on the table, how much somebody can get. So get your calculators out. So the first example, we've decided that OAS benefits, the full OAS, is $864 a month, and that the clawback begins at an income level of $102,000. Now, the reason I've made up these numbers and I've changed them is we want to be testing you, on are you able to follow the rationale and make the calculations? So this person, Francis, earned $110,000 during the previous year. How much will he be receiving every single month in OAS benefits, given that he's going to have a clawback? So his clawback is going to be $8,000, he's earned $8,000 of income, which will give him a clawback. So 15 cents on the dollar for the $8,000, divided by 12 months out of the year, Francis will lose $100 every single month because he earned too much money. So instead of the $864, he'll get the $764. So to kind of backtrack here, if the clawback starts at $102,000, this person earned $110,000. Well, 110 minus 102 is $8,000. Then the clawback is 15 cents for every dollar. And so if I take my calculator, 15 cents times 8,000, the clawback is $1,200 for the entire year. That's what this person loses out on because they earned $8,000 into the clawback territory. All right. Next, we're going to invert it. We've decided that the clawback begins at an income level of $110,085. The benefits are completely eliminated once the person's income reaches $178,954. So we just want to know how much money is on the table here. If I don't get clawed back at all, how much can I take home in my pocket? So here's what we're going to do. We're going to take our calculators, do the $178,954 minus the $110,085. The difference is $68,869. That's how much we have to earn into the clawback territory, if we want to call it that, to be fully clawed back. The clawback is 15 cents on the dollar. We multiply it by 0.15. So it turns out in this hypothetical example, there's a total of $10,300 $330 on the table. And if we divide it by 12, it's about $860 a month. The whole point of inverting it is we test if you really know how to work this inside and out. This is how you prepare for the exam. So, next up, we discuss the deferral of benefits. So, a lot of people get mixed up between OAS and CPP. Very quickly, with CPP or QPP, the standard age to take it is 65, but you can take it 5 years early or 5 years late. That is not the case with old age security. You cannot take your old age security before age 65. It is not possible to begin regular OAS before age 65. So, if you are still working or you think you're going to live a very long life, you are able to defer your benefits. You can defer them for up to 5 years, up to age 70. Every month that you defer the benefits, you will receive an increase in your benefits by 0.6% for every single month that you defer them. And that increase is from the time you start them, whenever that is, until the time that you die. So the maximum increase, which by the way, on your calculator, 0.6% for 1 month is 0.006, and you multiply it by 12. That's 7.2% or 0.072. You multiply that by 5, you get 0.36, which is 36%. That is the maximum increase you can get. Don't worry, we're going to do some calculations together. So this guy Ringo, he qualifies for full old age security, which in my example is $900 a month. However, he delayed the receipt of his benefits for a period of 17 months. So how much is he going to receive? Well, let's do the calculation together. We start with 0.006. We multiply it by the 17 months, he'll get 10.2% more than he would if he took it at age 65. We add the 1 because he's still getting the full 900, so we have 1.102 on our calculators, and we multiply that by the $900. That gets us to $991.80. Next up, there's this other guy named George. He came to Canada a little bit later, so he is entitled to 85% of the maximum OAS benefit. In this example, it is $950 per month. In addition, we're giving you more information. George delayed the receipt of his benefits for the maximum amount of time that he could. You have to know that that's 5 years or 60 months. How much will George receive? So let's do this together. First of all, we know he'll get 85% of $950, so 0.85 times 950 is $807.50. So if George took it at age 65, he would get the $807.50. Now, the increase is 0.006% per month times 60 months, 60. That's a 36% increase. So 0.36 is what we have on the calculator, plus 1 equals 1.36, times 807.50 equals $1,098.20. That is how these calculations are done. So, if we want to look at all the benefits together and summarize them, the regular OAS benefit, which is the one you will deal with most often, is taxable. The others are not. The benefit period for all 4 of these is the same, July 1st to June 30th. The allowance and the survivor allowance is only available for those aged 60 to 64. The GIS and the regular OAS benefits are available for those age 65 and above. The maximum benefits as of July 2024 are here, but these change every single quarter. You don't have to memorize them for the exam. And of course, we want to help you out a little bit more. So if you get to the test and you want to look out for the following. If somebody's trying to talk to you about taking OAS early, they're either very confused between CPP and OAS, or they're trying to bait you into the wrong answer, because this is not possible. So if you get this wrong on the exam, then I can safely say shame on you, because you listened to this video, I said it, and then you still got it wrong. So the point is, we want you to get this right. The second thing is the GIS reduction. It used to be, it was at $3,500, which is the YBE, the yearly basic exemption. That was changed. They increased that window up to $5,000. A lot of people forget about it completely, and they say this person earned $5,000, what's the GIS reduction? They think $2,500, when in fact it's zero. And lastly, we want to know which benefit is taxable. Only the regular OAS benefit is taxable. The others are not. If you have any questions, please go ahead and put them in the comments section below, and I'll try to get to them. If not, good luck on the exam, and thank you for being with us.